Hello, this is the Trade Site U.S. Stocks and Futures Market Preview and Domestic Economic Roadmap for the week beginning Monday, the 24th of June, 2019, ending Friday, the 28th. Hope you had a good trading week. It was excellent for us, 8 for 8 on our stock picks. Really nothing to complain about except for the fact that a couple days were slow again. I'd love to have, more like 15 trades trigger in a week, but not a bad week when you don't have a loser. It's hard to complain. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures formed right near the highs on a cup and handle style formation over since last September, basically. We'll see if that leads to a breakout or not. Doesn't look super interesting from that perspective with all the news that's out there, but you never know. Let's go through the major daily charts, then we'll look at the intra-week action, and then we'll go from there. So crude oil up 53 cents to 57.60. Gold up $6.10, surging now, breaking out of that base to new highs. Remember that the key here is look at that 13 seeker buy signal back in May. How on target was that thing? That's just amazing. You gotta love that tool. S&P cash loses 3.72. Remember, this was triple expiration on Friday, which is typically pretty flat, and it was overall. NASDAQ 100 down 9 on Friday. Remember, we've had a lot of gap ups here. Not more than usual. Go back on this chart and try to find as many gap ups over the last, like we've seen over the last 2.5 weeks, 3 weeks. It's pretty annoying, actually. SOX down 10.53. Biotech's up 22.46. Russell 2000 down 13.86. The VIX gained 65 cents to 1540. Notice how we've never broken that risk line from that. You don't usually get a 13 buy signal or sell signal on the VIX. We never broke the risk line of that last one. It's been support exactly. Trend at 0.98 for the close on Friday. Puts the 10-day moving average at 0.95, which is interesting because some of the numbers that are going to drop off here shortly. Let me go back 10 days. 1, 2, 3, 4, 5, 6, 7. Yes. 2 out of the next 3 days, numbers that are going to drop off are 1.25 and 1.30 or so, even though one of them is going to be a low number. If we get a couple low numbers in the next few days, that's going to take this down quickly over the next 3 days. And remember, if it gets to 0.85, that's a sell signal on the market. The last time we got one was right when the market was up here and topped out before it rolled over hard. NASDAQ volume 2.9 billion. Remember, it was looking horrible. I think it was only 1.7 billion at the close, but then they print an extra 1.2 billion closing out the options positions. It was not heavy early, which it usually is for expiration, triple expiration. Go back and look that last spike day on the volume back to 3.5 or so. That's in March. That's the triple expiration there. And then you can see the one in December way up. Now that's the end of year one as well, so it's usually bigger. But this is a really weak triple expiration, by the way, which is probably why we didn't see as much. We saw some gaps, but we didn't see any options unraveling, move much of it to speak of, anyways. Advance decline ratio on the Nasdaq negative 682. More stocks are down than up. On the New York negative 732. Google gains $12.17. Apple down 68 cents. Netflix gains 4. Amazon down 6.89. Tesla up 2.24. Facebook up 1.61. Goldman Sachs gains just 24 cents. This poor thing's been nowhere all year. Halfway through the year, it's been nothing since the second week of January. So bad. TLT, the 20-year bond ETF, finally a down day, down 1.46. The Dow is down 34, and that is it. Interest rates are heading lower, it looks like. All right, in terms of the intra-week action, let's take a look at the ES. We'll go to 10-minute candles so you can see the whole week. What a weird week. Okay, so Monday is a flat opening and closes flat. Tuesday, gap up and push for 20 minutes. That's the whole day. And then we close right where we were at the end of that 20-minute mark. Dead flat after that. Maybe a little lower even than where it was at that point. Note the 13 sell signal was the high for 2 days after that. Wednesday, a flat opening. Now remember, we've got a 2-day Fed meeting going on, so the Fed announcement makes us wiggle, but we really just close up a little bit and not even over the highs of Tuesday where that 13 sell signal was. Thursday, we get a gap up, came back, didn't quite fill, and then went back up to close where we'd opened. And Friday, small gap down that reached up to fill and then closed just about where we opened. That's why we got the S&P down 3 on Friday. So, the gains for the week are all in the gaps in the first 20 minutes on one day. And it's even worse when you look at the NASDAQ side because Monday had a push up for 20 minutes out of the open here and then dead flat. Tuesday, gap up and push up for 20. Then you wait for the Fed. Thursday, gap up and came back. Friday, wiggled and flat. So you can look at all these gains on the NASDAQ for the whole week and it looks on paper, it's 280 points. And if you eliminate the gaps, which are let's say Tuesday morning's gap was 80 points, Wednesday morning's gap was almost another 80 points. That's 160 in the move. And then you take the pushes up on Monday and Tuesday from 20 minutes, the first 20 minutes of the day. Wow. That's almost the whole move in two gaps and 40 minutes of trading. That's really an untradeable market for us, unfortunately. All right. In terms of economic data coming out in the week ahead, there's not a ton. Monday morning, nothing at all. Tuesday, OPEC meetings. We got the housing price index at 9, consumer confidence at 10, Richmond manufacturing and new home sales at 10. Fed Chair Powell speaks at 1. Wednesday, durable orders, goods trade balance, and preliminary wholesale inventories an hour before the bell. Crude oil inventories at 10:30. Thursday, the final look at GDP. That's the third look for the first quarter. No big deal. Unemployment claims. That's the weekly initial and continuing jobless claims numbers. Pending home sales and natty gas, that's the weekly number. The bank stress test results comes out. The G20 meetings begin. We got core PC, price index, personal income and spending. Friday, Chicago PMI and revised University of Michigan sentiment. Keep in mind, this will then end June. Friday is the last trading day of June, which means we're not at just the month end now. This is the not just quarter, but half year ending. So all the statements print, all the bonuses are paid based on wherever we can get to on Friday. So if we're going to close near the highs of the year, anything they made in January through here, that's it. They lock it in. Whatever happens after that, they've already been paid on it. But remember, that's very important because a lot of times they will peg these prices. And so I would expect not to see a lot of movement. It's now a summer Friday. We're past triple expiration, so we're definitely in the summer for everybody, no matter what type of school system you're in around the country. So Fridays are going to slow down a bit. Friday's the last day of the quarter, the month, and the half year. Friday should be slow. Thursday could be slow because of it. Right? So if we're going to get some action this week, it better be Monday, Tuesday, and Wednesday in particular. Maybe Thursday morning. I wouldn't expect much Friday. And then we start the second half of the year. The interesting thing about that is a lot of times you will get a big move early in July. If you look at last year in July, there was a surge up for the first 3 days and then kept going higher for the rest of the month. If you go back the year before, it wasn't as pronounced, but well, no, it was. We had a surge up at the early part of July. If you line that up and look at it visually, you can see right here where it's at. If you go back to 2016, July, we had a surge up as well. Okay, now it doesn't have to always be a surge up. And a lot of times if you're at highs, it's actually, in fact, a surge down. So here's one where there was another one. Look at this, a surge up for 5 or 6 days for sure. If you line that up right when the beginning of the year started, July started, the beginning of July started. Not so much back in 2014. Let's look at 2013. Yeah, surge up again. So keep in mind, you do tend to get a move. The only thing about that following week, though, 4th of July this year lands awkwardly on a Thursday. So we've got Monday and Tuesday and Wednesday, but the big players will leave Wednesday, make it a 5-day weekend. They'll be gone Wednesday. Thursday's for the holiday. Friday, nobody's coming back. Saturday, Sunday. So it's going to be an awkward trading week. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.